friends, and welcome to the latest issue of the Wiser newsletter. Now for this week's Crypto Corner, I'm looking at the institutional investment that is being made by many corporations by placing Bitcoin on their balance sheet. Now in the very first issue of Wiser back in January, I included a piece on CEO Michael Saylor's big bet on Bitcoin. Saylor is the CEO of MicroStrategy, a cloud software company and a massive believer in Bitcoin. Earlier this year, he spent over $1 billion in MicroStrategy cash to buy Bitcoin and put it on their balance sheet. And this was before Elon Musk followed suit at Tesla. Now, MicroStrategy have continued to put Bitcoin onto their balance sheet. And now Saylor is looking to put even more on the books. Just last week, he sold $500 million of corporate debt to buy Bitcoin. And now he's filed plans at the SEC to raise up to $1 billion by issuing new stock so that he can buy even more Bitcoin for the balance sheet. Now currently MicroStrategy holds around 92,000 Bitcoins, which is worth somewhere around $3.7 billion at today's prices. And it's a bullish move, and both MicroStrategy and Tesla are playing a risky game, putting such a volatile asset on the balance sheet. The issue is impairment, which is due to the way that Bitcoin is classified for accounting purposes. This is where the value of the asset goes down and the accountants report a loss in the accounts for the corporation. Last week, MicroStrategy said it expects to report a loss of $285 million for the current quarter on its Bitcoin investments alone. Tesla did much the same the last quarter, albeit much smaller in their financials. Now, when it comes to trying to second guess which way Bitcoin is going, Elon Musk continues to play the social media hype game when it comes to pricing. Last Sunday, he tweeted that Tesla would now resume taking Bitcoin as payment for cars, and as a result of his tweets, the price jumped 10%. But he did also say that they'd only take Bitcoin once the industry could show it was 50% users of renewable energy. Now, quite how he expects to satisfy that test is unclear. Now, cynics might say that it's just another attempt by Musk to manipulate the markets, but I couldn't possibly comment. Now, in the week that El Salvador became the first country in the world to adopt Bitcoin as legal tender, the bookies seem to think that Bitcoin is going down. US betting platform usbookies.com have cut the odds to 8 to 11 that Bitcoin will fall to $10,000 this year, a price it hasn't seen since last October. Whereas the consensus amongst futures traders is that the price will end the year around $37,000, which is roughly where Bitcoin is hovering today. And with approximately 1,183 days to go until the next halvening event, and each of these previous halvenings have preceded a significant jump in Bitcoin price, it seems to me that the futures traders have probably got it right. Now, on the crypto flip side, a story earlier this week is the sort that gives cryptocurrency a bad name. On Monday, a token called Webdollar, which saw its trading price rocket over 164,000% before returning to Earth in less time than Bezos can fly to the edge of space and back. In just 3 minutes, its market capitalization went from 1.8 million to $1.5 billion, making it the 18th most valuable crypto for a fleeting moment. Even though there is little to suggest the utility for this coin is anything of any significance. In all, over a 3-hour period of significant trade yo-yoing, the price of Webdollar rose from around $0.0004 to around 71 cents before collapsing back to where it started. Now, as I write this article, the coin is now ranked around 950 in the crypto market cap league table, and the takeaway from this story is really simple. This looks like an incredible pump and dump fueled by significant automated trading volumes over a very short period of time, largely through an unknown UK-based exchange called IndoX. The headline of 164,000% growth is a huge magnet for the uninitiated looking for a quick buck, and this is a warning sign. And this reminds us that we are in an unregulated market when it comes to cryptocurrency. Until this gap is closed, I'm afraid crypto trading will continue to look like the Wild West, sadly. Now, I'd like to give a plug to 2 newsletter apps that will make your life a lot easier. They certainly do mine when I'm creating these newsletters. The first is a free service from The Sample. You basically go online, you tell it what you're interested in, and the algorithms will find newsletters that match your preferences, and then they will send them to you. The second is Slick Inbox. This is an app that gives you a unique email address. This way you can forward all your newsletter subscriptions to the Slick Inbox that you can run on Android or iOS, and it does not clutter up your email inbox with all of your newsletters that you can read at your own leisure. Slick is in beta mode, but it is stable and it works. And quite frankly, I'd be lost without it. Thank you very much for reading, listening and watching this issue of the Wiser newsletter. I hope that you've enjoyed it. If you do, please let us know by either leaving a comment below or clicking the little heart button if one appears on the platform that you're finding this on right now. And please remember to subscribe to the YouTube channel if you're watching this video right now. So until next week, thanks very much for watching, listening and reading. And remember, inside information gives you leverage.